I want to start on incentives because we've been talking a lot about that lately. And I just wonder, across different markets and different price points, you're kind of on the higher end here. How much are you needing to incentivize?
Well, we're selling land to the home builders, and our home builder partners that are selling those homes, the really only incentive they're putting out there has been a rate buy down. And most of that has been relatively modest. We've seen public home builders post margins north of 25%, some close to 30% for almost 2 years now, which is a sign of their strength. And it's representative of the supply-demand imbalance. We have so much more demand than there's supply. The amount of incentives a home builder needs to offer right now is not meaningful.
Now, what about the labor that it takes to develop that land? Right, for a long time, especially during the pandemic, it was really tough to get the labor and to get the materials needed to get the building done. How has that shifted?
It's become a little bit easier. The labor is more readily available. The materials that we need, we're talking 16-foot sewer pipes in some instances, are not, off the shelf at Home Depot or Lowe's. These are custom ordered, coming largely from overseas. We're able to get those materials and get them in appropriate pricing these days.
What's the power of cash in this market? I imagine if you need to borrow a lot to get a project done versus if you've got access to capital, it makes a big difference.
Yeah, we sit on large cash balances at Howard Hughes specifically for that reason. We need to deliver those amenities that our consumers, our residents demand in our master plans, and being able to put more cash of equity into those developments that's helped us to achieve loans in a difficult lending market at much lower rates.
Now, you say that you're seeing a lot of demand for the higher end amenity communities where you got your pool and your fitness and whatever else right close to you and you're close to work. That's interesting to me. I don't know if it's unique to the areas where you're operating, because a lot of times in hot real estate markets, you see people pushing out to the exurbs just trying to get into whatever they can afford.
The demand we're seeing right now is for a quality of life, and that quality of life is largely driven by access to outdoors access to trail system, great schools for their children, and short commutes to work. As this return to office is continuing to take hold, having a 5 or 10 minute commute is so much different than an hour train ride. That's driving a lot of buying decisions, and we're seeing more and more folks moving into our communities every day seeking that quality of life.
Is there a flip side to that, where there are people who had moved farther away when remote work looked like it was more of the future than it is, and now the demand has shifted?
Yeah, we've seen a remigration into these walkable urban communities like Summerlin outside of Las Vegas or Bridgeland outside of Houston, which are those live, work, play, learn, discover communities that seem to be at the middle of the bullseye for consumer demand right now.
There have been some stories out there, some months ago about designs changing so that homes were smaller so people would be able to afford them. Are you not seeing that in the markets where you operate?
No, we're absolutely seeing that. Over the past 5 years, the average home size has come down about 8 to 10%, but it's still double what it was in the 80s. I don't know how you grew up, but I had a bunk bed and a shared bathroom down the hall. I think now everybody has their own ensuite bathroom, home office, 3-car garage. Consumer demand over the past 40 years has really exploded in terms of the size of the home. The price per square foot of the home hasn't meaningfully outpaced inflation. So when we talk about affordability, a lot of it's consumer demand driven, not as much it just costs that much more to build a home today.